Good morning, everyone. My name is Sheila Fitzgerald, and I am the Deputy County Administrator for Okaloosa County. I'd like to welcome each of you to today's webinar to learn about Okaloosa County's funding opportunities for nonprofits. We have, I believe, between maybe 80 to over 100 nonprofits that are registered to participate in today's webinar. And it looks like we've got about 70 participants already on the webinar. So we're going to go ahead and get started today. I really appreciate each of you taking the time today to participate, to learn about these opportunities. Again, if you missed my earlier message, to confirm that our technology is working smoothly, if everyone can hear me okay, and if you can see the webinar slide, if you could just put a thumbs up or an emoji into the comment chat feature. We'd also like to ask each of you to put the name of your organization and an email address so that we have record of who is all participating today. Our goal for today's presentation is to keep the duration to about an hour. Depending on how the presentation goes and how many questions we receive, we may go a little bit longer, but we'd like to respect everyone's time today. So due to the large number of participants, everyone will be muted during the entirety of the presentation. Our panelists obviously will be able to unmute themselves and present throughout the presentation. As we move through the presentation, please type your questions in the chat feature. We'll answer as many as possible at the end of the presentation, and for any that we do not get to or that we don't have an answer for today, we will be posting a frequently asked questions document on the county's website, and we will share that information as quickly as possible. So before we get started, I wanted to introduce our Okaloosa County team that is assisting during the application and award process. So you will hear from a few of these individuals today. Represented is our Office of Management and Budget, including our grants management team, our Public Information Office, and our Chief Assistant County Attorney. For today's presentation, we will follow the outline as represented here. And while most of you are here to learn about the American Rescue Plan Act funding opportunity for our nonprofits, our Office of Management and Budget Director will also spend a few minutes discussing the county's annual opportunity for nonprofit assistance through the county's annual budgeting process. Then we will get into the ARPA specifics, including an overview of the American Rescue Plan Act. We'll provide some background on how this opportunity was established, and we'll give you an overview of the funding opportunity, the application process that you will need to follow. We will then hear from our grants team about the grant award process, which will outline the requirements that funded agencies will need to follow. These are federal grant dollars, and it is important that our nonprofits carefully consider the responsibilities associated with federal funding before they apply. And last, we will cover as many questions as time allows. So many of you have already checked out the county's website. Most of what we cover today is available on the county's website. We have established a page specifically for this nonprofit funding opportunity. You can navigate there simply by going to myokaloosa.com/nonprofit funding. You can Google search the term Okaloosa County nonprofit funding, or you can navigate to the county's website and look under special features. Once at this page, you will have the opportunity to sign up to receive emails specific to this funding opportunity, obtain information on each funding opportunity, download the application packages, obtain grant application submission instructions, and see a frequently asked questions document, which is forthcoming. And please check the website often, as we may add additional helpful documents and revise the frequently asked questions document periodically. So now I'm going to turn it over to Faye Douglas, who is our Office of Management and Budget Director, to provide information on the county's annual solicitation of applications. So Faye, tell us a little bit about this annual nonprofit funding opportunity that is available each year, separate from the ARPA opportunity?
Definitely, and good morning, everyone. Yes, in May 2019, the Okaloosa County Board of County Commissioners approved a nonprofit funding policy and application that provided an even and transparent process for approving awards. This opportunity is available every year around the April time period. The policy statement states Okaloosa County is committed to providing financial assistance to those nonprofit agencies which assist Okaloosa County government in carrying out its vision of providing an unmatched economic opportunity and quality of life for all citizens, and mission to engage our private and public sector partners to provide economic opportunity and excellence in critical services to enhance the quality of life for all residents. The grants are open to 501c3 nonprofit agencies and must have been in operation for 2 years by December 31st of the preceding application deadline. So for this year, that's 2 years prior to December 31st, 2021. So that means 2019. The documentation that must accompany your application will show that this will provide this information to us. This grant will assist your programmatic and operating expenses, assist you with providing those services to your residents, and not necessarily capital items. Only one application is requested per agency. It will be permitted per agency. The maximum the county has awarded is $50,000 so far, and the amount of your award becomes critical when it comes to your agreement and reimbursement request. Those awardees less than $10,000 sign an affidavit attesting they are using the funds according to policy in the application and request a quarterly reimbursement. Those awardees more than $50,000 provide support and documentation to submit to support their reimbursement request. Copies of checks, receipts, payroll registers, those types of items. The application cycle is typically announced in April and is open for a period of about 30 days. This year, the application is due on May 2nd, but that's not normally the case. I would urge everyone to put a reminder on their calendars for April every year to see what the deadline for that year is. The recommendation is made to the BCC in the summer during budget workshops. We have 2 budget workshops in July. It is usually at the second workshop, and that is an advertised meeting, and the agenda is available for view. The applications are evaluated and scored based on the criteria outlined in the application. So please review that scoring and evaluation criteria when completing your application. The funds are available October 1st each year. Our period of funding is October 1st through September 30th of the next year. That's the 12-month period. This year, a total of $218,500 was awarded to 9 nonprofit agencies. We typically budget and plan for about $250,000 annually, and this year it was $218,000. This year's cycle is now open, and the applications are due, like I said, is due May 2nd, 2022. But like I mentioned before, please every year look at the application deadline. Please look at that. The application must be submitted along with the documents seen here by the advertised deadline. So if you're planning to apply for this opportunity, please make sure that all of these items accompany your application request. And please email your application, all of the documents, any questions that you have to budget@myokaloosa.com. There's several people who will be who views this item, and then your question can be answered expeditiously. So thank you very much.
Thank you, Faye. So again, the last few slides that we looked at and heard from Faye, that is specific to the county's annual opportunity for nonprofits that are providing services that may otherwise fall to the county. And so just wanted to be clear that if you are only interested in applying for the annual nonprofit funding opportunity, if you are not here to apply for ARPA funding, then you'll just need to follow the instructions specific to the annual nonprofit funding opportunity that is listed on the website that we shared earlier. So now for the good stuff. Before we get into the specifics of the ARPA opportunity, I wanted to provide you with a brief overview of the funding source. And so we are talking about the American Rescue Plan Act. We're going to refer to it as ARPA throughout this presentation. Was passed on March 11th of 2021. And through the state and local coronavirus fiscal recovery fund, which was authorized under ARPA, Okaloosa County will be a direct recipient of approximately $41 million. On January 6th of this year, Treasury finally released the final rule, and that takes effect April 1st of 2022, which is actually tomorrow. So all of the rules of this program are going to be consistent with that final rule. Per the rule, all of the funds that the county receives have to be incurred and obligated by December 31st of 2024. And then all of the funds have to be expended by 2026. Now, specifically for this Okaloosa County nonprofit opportunity, we are going to ask, to the extent practical, that your nonprofits spend the funds within 2 years. And we'll be asking you to propose projects that can be completed within a 2-year period. So because these are federal funds, again, there are very specific rules and requirements that will have to be followed. You're going to hear more about those in a little bit, but just I'll request again that you carefully consider that you will have to follow those extra rules and requirements before putting forward an application. And just a note here that not only does the county receive funding, but all of the county's 9 jurisdictions also are receiving funding either directly from Treasury or through the state of Florida. So it's possible that some of our cities may also be offering assistance to nonprofits. If you have a partnership with those cities, you may want to reach out and make that inquiry. There is also other opportunities available to nonprofits through the American Rescue Plan Act. I hope most of you are familiar with the grants.gov website. If you are not, I would check that out. And there's an opportunity to search grant opportunities specifically for nonprofits. So the state and local fiscal recovery fund had 4 key objectives to those funds. You can see those here. Primarily, the funds are to be used to respond and recover from the COVID-19 public health emergency, and then to address those economic impacts that were had as a result of the pandemic. So that's supporting the health of communities, helping households. The county is able to help nonprofits, and you are able to then turn around and also help the recipients of your programs and services. And within the ARPA framework, there was really kind of 4 major categories of funding. And so our nonprofits are really going to fall within this public health and economic response piece of the pie. And so as a county, we have substantial flexibility to utilize our ARPA funds to meet the needs within our community. And so our board has decided that we realize the value that nonprofits play in recovery. And so our nonprofits are going to be able to, utilize some of those funds to do programs, services, and capital expenditures. And so in essence, instead of us providing those direct services, you as a nonprofit will carry out the eligible uses of those funds and serve beneficiaries on behalf of us as a recipient. And so we also have the ability to issue direct grants to nonprofits that have experienced financial hardship. Now, many of you know that our Board of County Commissioners make the decisions regarding how the county's funding is to be spent. And so specifically, they held agenda discussions on ARPA funds at the January 4th and March 1st meetings. And what you see here is just a few of the key outcomes from the two recent meetings where ARPA funding for nonprofits was discussed. As you will note, initially the BOCC allocated $500,000 to the program, with another $500,000 tentatively earmarked in the future. But with the most recent discussion held March 1st, following a host of comments from area nonprofits, the board agreed that the need was great, and they increased the total allocation to $1.5 million. They also specifically enhanced the opportunity for nonprofits seeking to do transformational capital projects through capital, and those projects are such that may otherwise not be able to be accomplished outside of this funding source. And I realize that you probably won't have time to jot down these web links, but again, this presentation will be made available soon after this webinar today. And if you'd like to take the time to hear the BOCC conversations regarding this funding source, I think it's particularly helpful before you craft your proposals to spend some time to listen. And I have noted the meeting links. Just click on video and then you scroll to the time, 1 hour and 56 minutes within the video to hear the specific conversation. I think many of you will get some good nuggets of information that you may wish to incorporate within your presentation. So now it's time to jump into the details of our nonprofit opportunity. And the purpose of this grant program is to provide financial support to eligible nonprofit agencies that have been affected by the COVID-19 pandemic that are actively providing critical public services to the citizens of Okaloosa County. First and foremost, the opportunity that has been established by the Okaloosa County Board of County Commissioners is largely consistent and flexible within the guidelines established by ARPA. The most important note here is that funds may only be used to respond to the public health emergency or address the negative economic impacts caused by the pandemic. And here shortly, we'll discuss the types of expenses that fall under the response to the public health emergency and address negative impacts categories. And a brief note regarding the differences between the ARPA opportunity and the county's annual opportunity for funding assistance. You'll note here that the ARPA funds are open to 501c19 nonprofits in addition to 501c3, and that they only have to be in operation for 1 year as opposed to 2 years, which is the requirement with the annual opportunity. So there are a few options open to our nonprofits that are interested in applying for ARPA assistance. And so the first is that if you wish to enhance, increase, build upon the programs and services that you are already providing to your recipients in the future, or if you have a capital expenditure need, you may present those proposals to us for consideration of future expenditures. And so in that case, you as a nonprofit will act as a subrecipient that are providing those programs and services that meet with the ARPA eligibility. Now, if you have had expenses that are eligible per ARPA, that you have incurred and that you have not been reimbursed for from any other funding source, we would consider reimbursing you for those expenditures retroactive to March 3rd of 2021. Now, you'll have to present clear evidence of the expenditures, how they are eligible, and that you have not been reimbursed from any other funding source. We also realize that many of our nonprofits, were very hard hit by the pandemic, and in fact may have had lost revenue, lost donations. And so in the event that you are able to demonstrate that because of the pandemic, you had financial hardship, you lost revenue, you lost donations, we may be able to award a direct grant to offset those losses. And so again, you have to present clear evidence of those impacts. We'll be looking at financial documents, those types of things. And in some cases, by going that route, it may be easier on you as a nonprofit, because then you can simply receipt that grant and then still provide you the services that you would normally provide, but not having to necessarily follow all of the strings that are attached with a forward-looking program, if that makes sense. And we're happy to talk through that individually with nonprofits if necessary to clarify the comments that I just made. So generally speaking, if you've checked out our nonprofit eligibility screening application and there is an item explicitly listed, generally speaking, it will be eligible because we pulled that language specifically from the ARPA guidance. Now, as with every good application, we have an other category. So if you're reviewing the screening application and you don't see the activity that you are proposing to do, you check the other box and you describe to us what you are proposing to do, but the responsibility will fall on you as a nonprofit to demonstrate how those expenditures meet with the ARPA criteria. We are specifically encouraging you to review the final rule, the overview of the final rule, which is a recap. It's a shorter document. And Treasury has a lot of great resources on their website. There's a link to these documents on the county's website, but I would strongly recommend that you go to the final rule. It's a PDF document. You can search the term nonprofit and you can read everything there is to read about nonprofits and see what applies to you and your proposed projects. So the ARPA opportunity differs from the county's annual assistance to nonprofits opportunity in the fact that we will be considering funding capital expenditures. So in fact, this opportunity was so important to our Board of County Commissioners that they specifically directed that half of the funds be made available for capital expenditures, things that nonprofits may not otherwise be able to do, but for this funding opportunity. So note that they did not place a maximum cap for capital request, and conceivably, if an entity was able to put forward a very good request that checked all the boxes and it was going to have a legacy transformational impact, conceivably the board could approve one capital request. However, I would strongly encourage each of you to consider that, we want these funds to go as far as possible and to be mindful of the fact that we have a lot of great nonprofits that have a lot of really important needs. And so I would encourage you, please do not ask for the full $750,000. Let's consider our other nonprofit needs, and a note about that as well. You could ask for $750,000 and you could receive funding, and it might be a fraction of that. So just a note to carefully consider that request. And I'm going to turn it over briefly to our attorney, Carrie, who is going to talk a little bit more about the eligibility of the capital expenditures.
Thank you, Sheila, and good morning. So in terms of capital expenditures and eligibility, there are two different components of the funding that the county has made available under which a non-for-profit could capture eligible capital expenditures. The first and the easiest way, which is something that Sheila has already addressed, is the organization actually demonstrates a negative economic impact through, financial documentation and the likes. At that point in time, you could actually use whatever award of direct funds you received and put it towards capital expenditures. The caveat with that is that it has to be proportionate what the county gives you to the negative economic impact that you actually had. So we wouldn't be able to give beyond whatever the financial hardship is that the not-for-profit could actually prove. And the other way to do capital expenditures is if your not-for-profit has a capital expenditure that they wish to propose that responds directly to the public health and negative economic impacts of the pandemic, that would be a permissible type of capital expenditure. So I placed on this slide some examples that came directly from Treasury guidance of what are some types of capital expenditures that Treasury considers responding to public health and negative economic impacts. Those would include certain equipment that is health related in terms of being able to prevent and treat COVID-19 patients and the likes, ventilators, ambulances, ventilation system installations that would improve the air and can show that the system can help to mitigate the spread of COVID-19 and other types of viruses, as well as affordable housing facilities under certain circumstances, which we'll get to in a little bit on the disproportionately impacted communities. And then Treasury has also specifically stated they have 3 different types of things that they said are automatically ineligible as capital expenditures. Only one that they've listed is really applicable to potentially not-for-profit type of capital expenditures. And what Treasury has said on that example is that any request for construction of new congregate facilities to decrease the spread of COVID-19 in the facility is an ineligible capital expenditure. And I put that here because I know during the CARES Act, we had received some requests to provide some additional facilities for the homeless shelters and the likes to help be able to segregate people more to ensure that there was not the spread of COVID-19. But Treasury is saying with these funds, that's going to be an ineligible expenditure. So I definitely recommend keeping that in mind whenever you apply for any capital expenditures under this program.
Thank you, Carrie. So as we begin to actually look at the applications, and so you will note that you have to select whether or not you are applying for capital expenditures or an application with no capital expenditures. You cannot submit an application for both. Only one application per agency will consider. So you cannot put forward an application under capital, and you cannot put forward an application with no capital, nor can you put forth an application that includes both categories. You need to be very clear about which path you're going to take and only submit one application. The applications are going to be due May 2nd by 5 p.m. That is a Monday. You're welcome in case you are scrambling at the last minute to spend a weekend finishing it up. But we will ask that the application and all of the required documents are submitted by the advertised deadline. So if you're sitting here asking yourself, where should I start? So earlier we talked about the county's website, which is myokaloosa.com/nonprofit funding. You should start by downloading the application package. In that package, there are going to be 2 documents that you want to start with. The first is reading up on the May 2019 nonprofit funding policy. And then you're going to want to read the ARPA specific nonprofit funding guidance supplement. Now, in instances where the ARPA nonprofit funding guidance supplement differs from the nonprofit agency funding policy, the ARPA nonprofit funding guidance will prevail. You must complete both the nonprofit funding request application and the ARPA nonprofit screening application. And I recommend that you start with the screening application first. You do have the ability to attach additional pages of narrative if necessary. And unlike the other opportunity you heard about earlier, this one must be submitted via a portal, which the county has set up at myokaloosa.com/ARPA. So if you visited our county website before March 17th, it was a work in progress, and you may have come across an outdated version of the application. So please, please, please go today, go next week, check out the website and download the application package. And again, the applications must be accompanied by all of the documents that you see here. This information is also contained within the application package along with a checklist to make sure that you don't miss anything. If you have any questions regarding these documents, if you don't know what they look like, you don't know how to find them, please reach out to us sooner rather than later so that we may help you. I'm going to let our county attorney also address the next few slides, which are specifically related to impacted households and disproportionately impacted households and nonprofits.
So one of the key targets that Treasury had in this funding was specifically to help assist disproportionately impacted communities and impacted communities. So Treasury's defined two different terms. They have two different classes of individuals who have been more so economically impacted than others. The first is called an impacted class, and those are classes which experience the general broader based impacts of the pandemic, while disproportionately impacted classes face meaningfully more severe impacts, often due to existing disparities. And so Treasury has specifically identified that when you can reach certain calculations to identify impacted and disproportionately impacted classes in those situations, you will be able to have an opportunity to have broader authority on what you utilize the funding on. And to get to that calculation, Treasury uses a qualified census tract calculation, which you can find more information on through the sources that Sheila had cited as recommendations for reading. It appears in Okaloosa County, there's actually potentially two different qualified census tracts. Both are within neighborhoods in Fort Walton Beach. And so for those entities and individuals and households that are disproportionately impacted, in addition to being able as a not-for-profit to provide services to those individuals as it relates directly to the public health emergency, you would also be able to, in those instances, provide assistance with affordable housing for those who are in low-income areas. You would be able to specifically provide additional assistance when it relates to some of the other impacts and improvements needed in neighborhoods to be able to assist in helping a disproportionately impacted neighborhood come up to standards. You'd also be able to assist with childcare, early learning services, and the likes. But again, Treasury has a particular calculation that has to be met to be able to determine if a particular household is disproportionately impacted, as well as what's overlapping is if the not-for-profit could be considered disproportionately impacted in addition to serving the disproportionately impacted. Again, you have the opportunity to be able to obtain grant funds, not just for services related directly to the pandemic, but also to neighborhood revitalization, community development, affordable housing, childcare, early learning. For those, especially those related to affordable housing and the likes, I think we could individually speak to those nonprofits about the particulars that they need in terms of the qualified census tract. And Sheila, I think that's about it on that one.
Okay, thank you, Carrie. I realize that's a little bit technical, even for myself. And so, I think by visiting the guidance, these nonprofits that are participating today hopefully can read up on, these different terminology and how it may impact the proposals that they're putting forward. So a little bit about once you've completed your application and you've submitted them into the portal, the first step for county staff is we're going to be looking to ensure that the organization itself is a 501c3 or 501c19. We're going to ensure that you've submitted a complete application and that the documentation that we've asked for you to provide is also included. Then we're going to take a look at what you're proposing to be look to be sure that it is consistent with the eligibility outlined within the ARPA guidance. And those that meet the eligibility requirements will advance to the evaluation phase. And there was a question earlier in the comment box about how can we find the scoring guidelines. So as I mentioned earlier, the first step is to download that ARPA application package. The applications will be evaluated based on the criteria that is outlined on page 5 of the nonprofit application. And that is, that's what this slide here represents. This is basically showing you the different criteria that your proposals should, describe. And staff will be evaluating them based on the scoring key that you see here. And so a couple of things that are important to note is that our Board of County Commissioners has really drawn, I guess, a line in the sand, and they've said, hey, look, we are really interested in helping our nonprofits that are providing services that would otherwise perhaps fall to the county to provide. They really feel strongly that general fund dollars should not be used for nonprofits that are doing things other than what falls to the Board of County Commissioners. And so in the same vein with ARPA, they really want to see that we are assisting the nonprofits that are doing the things that may otherwise fall to the county. A note about leveraging, matching, we want to see perhaps if you have leveraging funding, other funding, please let us know. We also don't want to see that the funding assistance that is provided will in any way cause a nonprofit to be dependent upon the county. So that's what that evidence of decreased reliance is intended to reflect. And so just do your best to ensure that your application narratives address each and every one of these criteria. And then before our grants department covers the grant requirements that you must follow if you receive an award, I wanted to just quickly recap the differences between the different opportunities. And so that to the left, you see the annual nonprofit. That is the information that Ms. Fay presented at the very beginning of our presentation. If you're not interested in applying for ARPA funding, you can ignore the 2 columns to the right. And then for ARPA, there is the 2 categories, non-capital and capital, and you can see the differences there. This slide obviously is a lot of information, but this presentation will be made available on the website and will be emailed to participants. So you can certainly go back and look at this if you start to kind of panic about, oh, I don't know, I heard so much information, I really don't know what's what. Hopefully this slide will help guide you. So now I'm going to turn it over to Jane, our grants manager, to go through what happens if your project is selected for funding.
Good morning. Good morning. I'm going to switch screens if I can get that enabled.
So Jane, I quit sharing my screen, I think. Let me stop.
Okay.
Okay.
All right. Okay, I am not getting the ability to share my screen.
Okay, I've added it back up. So these are the slides that you shared with me. If you want me to just click through, tell me when
Sure.
to transition.
Sure. All right. So this is grants administration for Okaloosa County. We have Mindy, Jane, Marion, and Laura Lee. I'm Jane Evans, Grants and Restore Manager, and let's talk grants. Every grant has a life cycle. The pre-award stage is the stage that you are in. The application is completed and submitted, and then it's processed and recommended for award. In this case, our award stage, the Board of County Commissioners must approve the award. The execution of the agreement, which is going to contain your scope of work, a risk assessment, if any is needed. Then you're going to go to post-award, where you're actually going to do your scope of work. If you have to do procurement, your cash disbursement, and we will probably have reports on your progress, depending on how long your scope of work is, the duration of it. Reimbursement request is made, and also reporting of obligations, once again, if it's a longer award. And then the last stage is the closeout stage. The scope of work has been completed, final reimbursement request and final report is submitted, and then we talk records retention. And I have a few slides to discuss some items you might want to consider as you complete your application, plus information for the future. You might have heard a couple of things already, but it doesn't hurt to hear it again. So if your American Rescue Plan Act application is approved by the Board of County Commissioners for funding, you have an award. These dollars stem from federal sources through the Department of the Treasury and require additional steps. So what is the next step? Next slide. The nonprofit must sign an agreement with Okaloosa County. The type will depend upon who is the end user, so if the nonprofit will be receiving funds to provide services to an end user, then you will receive a subrecipient agreement. All federal requirements that the county must comply with will pass through to your nonprofit. The county will perform a risk assessment of your operations, and then afterwards, the county will formulate a monitoring plan for your post-award compliance. And once again, this depends on how sophisticated your scope of work is. If the nonprofit is the end user of the services in the scope of the project, then you will receive an end user grant agreement. The agreement period will begin when both parties have signed the document, and the end is no later than December 31st, 2024. And remember, as stated before, eligible expenditures cannot be before March 3rd, 2021. Next slide. So with both types of the unexecuted agreement, we will provide you an Internal Revenue Service Form W-9. You will need to obtain the signature of your nonprofit's authorized official on the agreement and the Form W-9. Once the agreement is signed by your nonprofit in the county, you have entered in the post-award phase. The county will provide you a copy of the fully executed agreement. The risk assessment will be completed if necessary, and you will begin your scope of work. Next slide. As you formulate the scope of your project in the application process, keep in mind the documentation you will need to provide to receive reimbursement. Depending on your budgeted items, examples of documentation required will be, if you have salaries and fringe benefits, proof of authorized rate of pay, timesheets, payroll register, and proof of payment to employees. For non-salary and fringe benefit expenses, which are like supplies, equipment, if you have construction costs, remodeling type activities, evidence of required procurement method of those purchases, either through a contract or a purchase order. Then once you have received the item. You have the invoice, the proof of the date of the receipt of service or items, and proof of payment for the project expenses. And lastly, any other evidence to clearly support your reimbursement request. A capital expenditures project will require additional documentation. And just to refresh your memory, capital expenditures are expenditures to acquire capital assets or expenditures to make additions, improvements, modifications, replacements, rearrangements, reinstallation, renovations, or alterations to capital assets that materially increase their value or useful life. And that's also quoted in the application. This is land, equipment, and intellectual property, which is your trademarks, which we probably won't have any of, copyrights, trademark, patents, and such. And so the equipment is going to have a useful life of more than 1 year. If it's less than a year, it's considered pretty much expendable and it's a supply. Equipment is going to be greater than 5,000, or if your nonprofit has a capitalization level for financial statement purposes. And you probably will know that. Now then, for the subrecipient agreement, the federal regulations require procurement must provide open and free competition. There will be no local preferences allowed. A micro purchase is less than or equal to $10,000, and you can obtain that from various vendors. They encourage you to spread the purchases around. Simplified acquisition is greater than the 10,000 and less than or equal to 250,000. And in that point, we're going to be looking for you to obtain at least 3 written quotes. If you cannot get those quotes, then there'll have to be a justification. You must ensure the vendor is not suspended or debarred in SAM.gov. So once again, when you went out and registered in SAM.gov and went through those steps and you obtained your unique identity identifier, then you're going to have to do that for your vendors also. So you want to make sure to check that UEI. Next slide. You will be required to complete a reimbursement request with your supporting documentation for every dollar you spend on the project. I'm going to say it again. For every dollar you spend on the project, you will be required to submit a progress report in accordance with your agreement, and the progress report will include the status of your scope of work, any noteworthy accomplishments, and any issues with completing the scope of your work. Now then, after you've finished, you're going to go into the last phase, the closeout phase. The scope of work was completed prior to the agreement end date, and that is a hard and fast rule. Your final reimbursement has been requested and your final report submitted. So the last item that really has a lot of implications is your record retention. You will be required to keep records in paper or electronic form that are continue to be accessible 5 years after all of Okaloosa County ARPA funds have been expended, which is expected to be 2026. So keep this in mind. You will need to maintain your records until 2031 or longer. And as time goes on, we'll give more direction with this. But so when you start and you do your application and you think about your scope of work, you're going to have to keep this information for quite a while. And we ask you to complete these steps to provide full documentation because Okaloosa County Grants Administration is the first step in auditing for compliance. Then the clerk of court for Okaloosa County, their finance team will review these items prior to disbursement because they're responsible for writing the checks. Then the clerk of court internal audit will review these items post disbursement. The expenditures on this award will be subject to the audit of our county's external auditor and any treasury monitoring processes that happen along the way, whether it's now, a year from now, 2 years from now, or post award. So we are a team at Okaloosa County. As we've done this webinar, we will work as a team to provide you support in understanding and providing the required documentation. We start by bringing you this webinar to set up a course for success and compliance with this Treasury guidance. So I wish you good luck, And thank you for your work with Okaloosa County citizens.
Thank you, Jane. I know that was a lot of information to process, but please know that if your nonprofit does receive an award, we envision that we will be able to provide you with perhaps a similar webinar where we can really go more in depth about the rules and requirements associated with meeting the federal requirements. Just a couple more slides before we get into questions. So I have some helpful tips for our nonprofits. So I think I mentioned this earlier. If you are applying for the ARPA funding, start with the screening application first. Complete it in its entirety, and then begin the annual nonprofit funding application. The applications themselves do have some duplication, but basically what you're doing is you're telling us how you meet the ARPA requirements, but you're also telling us how your projects are consistent with the Board of County Commissioners funding policy from 2019. Go back and watch those meetings. Again, the links to those meetings are in this presentation. You'll get some very helpful information by doing that. Go back, have another person in your organization review your applications, review the evaluation criteria, and give a critical analysis to whether or not you are adequately addressing each of those scoring criteria. If you can't see that you're doing it, we can't see that you're doing it, and your score is more than likely going to be lower. Have all the documentation ready before you go to upload your application. It is not a portal that you can log into, save your work, and go back. In other words, have all of your documents readily available to upload at one time. Please check the website often, as we may add documents or revise the frequently asked questions document. Do not wait until the last day to submit your application. You know, we'd like to be able to offer assistance to you, and the earlier that you ask, the more likely you will get a good level of assistance, because quite frankly, if you're all waiting till the very last day, it's just going to be a madhouse, and we won't be able to provide the level of support that you may be you know, looking for. Also, just a note that if you do submit your application and your documentation early, to some extent, we will be able to help you cure any deficiencies. If you've uploaded the wrong form, we'll likely be able to reach out and say, hey, this is not what we're looking for. Here's an example. Please, you know, send it to us. But we're not going to be able to handhold. We're not going to be able to do the work for you. So please, please, please start early. Read all the guidance. Ask your questions early. So if you've not already entered the name of your organization and your email address into the chat feature, please go ahead and do that now. Don't forget the deadline, 5 p.m. May 2nd, no exceptions to that. Thank you for everyone who took some time this morning to participate. We know that you all do very valuable things in our community, and we appreciate that. Now what we're going to do is Laura Lee in our grants office is going to scroll through the comments, and she's going to pull out some questions and pose them. And between myself and the staff, we will do our best to answer as many of those that we can. Since we only have about 6 minutes left, we may go a little bit over 10 o'clock. But again, if we do not get to your question today, please, please, please know that we will cover it in our frequently asked questions document if it is not information that is readily available within the guidance that is on the website. So Laura Lee, what are you seeing as far as questions in the chat feature?
Okay, we do have 2 or 3. The first one is, can nonprofits submit applications for both annual and ARPA funding?
Yes, with a caveat. So I feel like our Board of County Commissioners would like to spread the wealth, for lack of better words, to as many organizations as possible. And so just keep that in mind, that if if what you are proposing to do is eligible under ARPA, we would strongly ask you to consider only applying for ARPA funding. That way, if our other nonprofits are doing good things that just don't meet the eligibility of ARPA, they can then apply for the county's nonprofit funding. So yes, you can apply for both, but please do so, cautiously.
Okay, good. If you cannot get 3 quotes from vendors, regardless of how hard we try, can this be waived?
So I'll let Jane or Carrie briefly touch on that.
Well, I know that on the Restore Act, which is under Treasury, they pretty much expect that. Now, we could possibly assist you through our Okaloosa County procurement if you come to that situation, that we would be happy to help with that. But in general, the 2 CFR Part 200 is wanting to see that.
Yeah, and to quickly add to that, any sort of subrecipient agreement that you'll have will have all the requirements that the county has, because we have to pass them down according to Treasury. And that will include all the 2 CFR Part 200 requirements. Of course, we can help you walk through what that entails when the time comes.
I'll just add that the county has a procurement manual that is on the county's website. And I think it would be very helpful if you are planning to do perhaps a capital project or a larger project, that you maybe take a look at that procurement manual, because there's a lot of good guidance in there that we have to follow, that you will also have to follow, and we'll be able to provide some additional assistance on procurement for those that receive awards. Laura Lee, next question.
Okay, that kind of leads into this. I have some questions on whether we would be able to use the capital fund. Who can we reach out to discuss?
I think the best bet here would be to send an email to budget@myokaloosa.com. And to the extent that you can share a little bit about what you're proposing to do, and ask that a staff member give you a call back, we can certainly do that. Again, ask now, ask soon. Don't wait till the last minute, because we're really not going to be able to perhaps provide the level of assistance that you might expect.
Okay. Will we be able to save this presentation?
So we're going to do a couple of things. So these slides are going to be posted in a PDF on the ARPA website, which is the myokaloosa.com/nonprofit funding. We'll probably have those up. If not today, we'll have them up tomorrow. We'll also email a copy of this to those that gave us their email addresses in the comments, and that have signed up to get emails. So yes, you will have these slides.
Can you share the website URL again, please?
Yes, I will scroll to a page that has it on there. If I can find one real quick, but it is myokaloosa.com. And I am not sure if I'm saying it / or /, but it's nonprofit funding is the website. Can everyone see this slide? And then whenever you get there, you have an opportunity to join the email list. And then each of these boxes you see is a drop-down menu with information.
There's also a link in the chat as well.
Great, thanks.
What is a unique entity ID verification?
Jane?
Yes, if you go on Chrome or anything but pretty much Internet Explorer and type in sam.gov, it is going to take you to a registration page, and it steps through how you can register in SAM.gov. Once you've successfully registered in SAM.gov, you are issued a unique entity identifier. You may be familiar with the DUNS number. That was your entity's identification number for grants, especially federal grants, before April 4th of 2022. So this is all converting in the process right now. So we're leaving those DUNS numbers and going to a UEI unique entity identifier. Sorry about that. So this is currently going on. So if you haven't registered in SAM.gov, please go out there. There is a little bit of lead time, but you can be working on your application in the meantime before you're issued your final number.
Okay, the next question is the number of clients served section on the application for the number served by the entire organization or for the number served specifically for the program you're seeking funding for?
I would say that it is specific to the project or program or capital expenditure that you are seeking funds for. Feel free to include more information within your proposal about your total clients that you serve, but I think specifically for that question, we are looking for the proposed expenditure of funds, how many citizens will receive benefit from that.
Next question. Would updating a software program be allowable? It is heavily relied on, especially during pandemic.
I believe that I saw some information similar to that in the ARPA guidance, but that may be one that we have to research a little bit more and get back with the person asking that question. So I would just pose that question in writing to budget@myokaloosa.com.
Okay. I'm sorry, I lost my chat. It flipped over to the other page.
Yeah, somehow I lost the presentation as well. I'm trying to pull it back up again.
Okay, let me see. Okay, I've got it. Can an organization apply for non-capital funding under Okaloosa County NP funding and capital funding under ARPA, or do both grants require the same focus?
I'm sorry, could you repeat that one more time?
Sure. Can an organization apply for non-capital funding under Okaloosa County NP funding and capital funding under ARPA, or do both grants require the same focus?
If I'm not mistaken, that's asking the same question from earlier. Can you apply for the county's annual nonprofit funding opportunity as well as put forward an ARPA application? Is that what that's asking?
That's what it looks like to me.
Okay, so again, the answer is yes, but with a caveat that, if you are going to apply for both funding sources, just be cognizant of the board's desire to, assist as many nonprofits as possible.
Can you define what you mean by 1 year of operation? For example, if an entity was established in 2018 and held regular board meetings, but the organization did not begin service until 2021 because of COVID setbacks, is that entity still eligible?
I believe the date that we're looking for is the establishment date. And Carrie, if you don't mind maybe jumping in here with sort of what that official establishment date, like what document does that sort of originate in?
Yeah, and so this has two components to it. It's going to get a little complicated depending on the situation, but I think if the not-for-profit was established, like it was established in 2018 or the likes, then they are eligible. However, if they didn't actually provide services and the likes until 2021, they may not be eligible to be able to apply as it relates to the negative economic impacts, because Treasury is going to want not only financials for that, but also showing the services that you provided during the pandemic from 2020 and 2021, and prior to that from 2019. Like, you have to compare the prior to the pandemic financials in those situations. So you might be eligible for other ones for services currently being rendered, but not negative economic impact funds.
Thank you, Carrie.
Okay, the next question is, can we contact you with a question?
Definitely. Please send them in writing to budget@myokaloosa.com. And, if everyone can do their best to send over a round of questions by April 7th, then we can be sure that our frequently asked questions document is fully updated and posted by April 14th. We're going to go ahead and put one up sooner than that, but, to the extent practical, we'd like to really have a full, complete set of frequently asked questions to post, by mid-month. That way people have, a little over 2 weeks to, take a look at that frequently asked questions document and be sure that there's no additional information that they need to know for their proposals.
Next question. Are you speaking about our tax ID number, or is it another ID number for this unique entity ID?
Jane, you want to cover that one?
Yes. So in the process of getting your SAM.gov, you have your identity number that the IRS has assigned to you, and then you do register still in the DUNS system, and then you take those items and you register in SAM.gov. So it's not the same number, but the SAM.gov will step you through the process on the screen that you pull up.
Are there any regulations for organizations that span multiple counties? Our founder is in Marion County, and we now have a branch in Okaloosa County.
We don't have any hard and fast rules on that, but I do feel like the responsibility will fall to the nonprofit to provide evidence that Okaloosa County residents have been being served. In other words, if you have not operated in Okaloosa County, if you've not been providing services to Okaloosa County residents, this is not an opportunity for you to necessarily get in the business of helping Okaloosa County residents. So if you can provide, clear evidence that you are operating within Okaloosa County, I believe that would be acceptable.
And that's the last question we have.
Okay, wonderful. Well, I think we did really good today, being that we are only 10 minutes after 10, and we got through our presentation and we were able to answer questions. But again, thank you all for participating. This presentation is being recorded and will be made available, so you can go back and listen to it. You can share it with other members of your nonprofit teams, or if you know a nonprofit that couldn't participate, they can go back and watch it at their leisure. And thank you all, and we will go ahead and conclude today's presentation. And thank you all to our county staff and presenters for your help. And you guys stay safe and have a wonderful day.